Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISEE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.isee.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
So we're going to take a closer look now at these clusters. All right. First, we have the Dow Jones here. All right. The peak for the year for the Dow through March had actually been at the beginning of the year. The Dow had been just over 13,000 in January. And so we were seeing now low values, consecutive low values in March. There were a couple low values in February, but the series of low values really came in March. And again, this is simply an indicator, so it's nothing that's, I'd like to tell you this is 100% accurate, take it to the bank, this is the only way to go. But you'll notice on the bigger chart, the full year, that there were a couple of consecutive lows in February as well. But what we really saw was a validation of the lows in March where we had multiple days of consecutive lows. So that's what we're looking at right now on the Dow. And again, keep in mind, the low ISEE values means that there are more customer opening long puts being purchased than calls. So again, although puts tend to be bearish, the ISEE index tends to be a contrarian indicator. Okay? So as you would expect, when we see these low values for the ISEE, we would anticipate the market to be moving higher. On March 10th, the Dow was at 11,740. All right. Again, as I said before, the S&P 500 is strikingly similar. Same with the S&P. Through March, the high of the year had been in January. The S&P had been right about 1450, and now here in the March lows, the low indicated by the ISEE, the S&P 500 was down to 1273. And again, keep in mind, the lower the ISEE value, that means the more opening long puts that are being bought. All right. I'm going to answer some of these questions. I see people sending in questions right now. You can certainly continue typing in your questions into the browser, either in the chat section or in the Q&A session, and I'll get to the questions here as well. Okay. So again, strikingly similar. The low for the S&P in March was at this time, March 10th, was 1273. Okay. So the cluster of highs that we began to see was basically a little over a month and a half later in April. And again, the high values simply mean that there is more opening customer buying of calls than opening long customer buying of puts. And what we're seeing here with these high peaks, these red dots that are circled, or what red diamonds are circled, tend to be excessive call buying in April. We did see a couple of additional consecutive peaks in May, here 2 days in May, which looks to be additional warning signs of the topping out of the market here. So between the lows on March 10th, when the ISEE was at the low, and essentially May 2nd here we're looking at on the Dow, the Dow returned just over 11%, which is not a bad return, certainly on an annualized basis, a great return on a monthly basis. The S&P 500, again, between the low on March 10th, and the S&P actually peaked a little bit earlier, around April 18th. The peak, the low in March 10th to the peak around April 18th was up just over 9%. All right. So again, ISEE in this case tends to be a good indicator of excessive call buying and excessive put buying. Okay. So again, let me just go back here a second here. So between the lows here in March, again, what these clusters tend to indicate is that the market tends to shift in direction. So again, the low ISEE values as a contrarian indicator tends to lead us to believe that we're going to see the market moving higher up until April. Oops, hold on here. Where we saw the topping out of the ISEE values, we tend to believe that the market's going to be starting to move lower. Okay, so again, an indicator of market turning. And what we did see here from April through July, middle of July approximately, we saw drops of about 17% for the Dow and about 14% declines for the S&P 500. So again, the highs that we're seeing here in the April-May timeframe, again, indicating the potential shift in the market direction to the lows here into July. We saw, again, a pretty good downturn, both for the S&P and for the Dow, double-digit drops, respectively. All right. Now, what's interesting here on this slide, which is highlighted here on the end in red, is we had, it's hard to say what's happening here at this point. We noticed this at the end of August when we were putting together our analysis for the market. We happened to see 3 consecutive highs for the Dow Jones again here for the ISEE index. So what we indicate in the paper is this is a good area to watch, but it was somewhat perplexing, to be honest with you, because we were seeing the consecutive highs indicating excessive call buying, which again would lead us to believe that there would be a turn in the market direction of the market. And in this case, since there was excessive call buying, we would have anticipated that the market would have been turning the opposite direction, so a decline. But the market had already been down about 14% for the year. So when we put this together in the paper, we indicated there on page 6 in the second paragraph that this would be an area to watch, because at that point we didn't know what the market was doing, but we certainly know what the market has done since.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.isee.com/podcasts.